complete speculation. I mean, half the economy pundits think that rates are going to be cut by the end of the year, and half think they're going to be up at a terminal rate of 7%. The truth is nobody knows, and how fast the economy slows. And the remarkable situation we have that we've never had before is we're at full employment. Unemployment is under 4%. Now, that's never happened before in a recession, so you're going to need some massive event that gets everybody out of work. So I don't know how that's going to happen, and that's why you just don't know. I mean, clearly the best strategy now is to go buy stocks that pay dividends, that are high quality, have good balance sheets, less speculative, and the market's already done that. But to be completely out of equities now is probably risky as well, because if it's true that we're stalled out here on rate hikes, this is as good as it's going to get on treasuries, and it's still not beating inflation. And maybe the bigger issue is, what is terminal inflation? Maybe it never gets back to 2% again. Maybe it's more like 3.5%, 4%. All of these are unknowns, which is why these are difficult times in terms of what it takes to be a successful investor.
A lesser-known but historically reliable Bitcoin price indicator has flipped positive, signaling the onset of a major bull market. Bitcoin's reserve risk multiple has crossed above zero, turning positive for the first time since October 2021, according to blockchain analytics firm Glassnode. Hello and welcome to Money Talks. In today's video, Kevin O'Leary shares with us his outlook on the Fed hiking rate, the CPI report, and the recent U.S. inflation numbers.
I think most of the market participants and pundits are at the place where they think the Fed is nearing the end of rate hikes. Now, whether there's another 25 basis points in the May meeting, whether there's a further 25 after that, another 50 basis points, yet to be determined. I'm now moved into the camp where I would like them to pause for 3 months. And I'll tell you why I say that. I've noticed that rent in most cities outside of the coastal region has rolled over 20%. Not yet reflected in the CPI data, the way that CPI is calculated. That's a mistake, should be fixed, because that's very anti-inflationary. So right now the CPI says we're at 6.1% inflation. I think the truth is we're more near 4.5%. But the one that's bothered me the most since you and I last talked is the data I'm getting from my own CEOs in mid-cap and small-cap companies. Liquidity for loans has completely dried up in the last 2 weeks. And I'll give you an easy way to look at that. Let's say you're a company doing $50 million in sales, 100 employees. At any one time, 60 to 90 days of your sales are tied up in receivables with big box retailers or whoever else you're selling to. And you used to be able to factor that, in other words, turn it into cash for about 7 to 9%. Today, those rates have gone from 17 to 29%. All in a matter of about 20 days as a result of what's occurred with the Silicon Valley Bank meltdown and the concerns regional banks now have about liquidity measurement. So that is in itself doing the Fed's work, and I would very much like the Fed to look at that data from senior loan officers as soon as they get it, because there's a big problem brewing here.
When you say big problem brewing, what is the main danger you're seeing as the outcome?
You can't get any capital. You can't raise money anymore from a regional bank because regardless of whether the Fed guarantees the loan or not, the loan officer is saying, we know it's going to get tighter. We know regulation's coming. We're going to wait and see what occurs in addition to rate hikes, which make it even harder to be profitable. I think we have a real soul searching to do in America about how many of these regional banks are going to survive and how many people want to support them in perpetuity, regardless if they're ever profitable again. And so this transition will reflect itself in loans to small and mid-cap businesses, which represents 70%. That's 70% of the economy. And I think the Fed's work is done. I think they're going to have a lot of anti-inflation pressure by the fact that they're going to slow business down because they can't borrow money.
FTX's collapse was the catalyst for a new bullish cycle in cryptocurrency markets, Bernstein said in a research report Monday. The crypto exchange's demise cleaned up the final tranche of toxic crypto leverage and taught digital asset investors the importance of decentralization and self-custody wallets, the report said. Macro catalysts are aligning for Bitcoin, the world's largest cryptocurrency by market cap, the note added, with continued weakness in U.S. regional banks, and further deposit outflows towards money market funds and the big four U.S. banks, all reflecting concerns around the centralization of money. Any potential dislocation, whether on the bank's credit side or on the sovereign side, positions Bitcoin perfectly as a safe haven asset alongside gold.
No, I think the market should be the market. I don't think we should guarantee every depositor in every bank everywhere. If we let the market be the market, there'll be consolidation. There'll be super regionals that occur. We have 3,000 banks in addition to the money center banks. Maybe the country can run on 1,000 or 500 or 800. I don't know what it is, but I know there's no political appetite or voter appetite or taxpayer appetite to guarantee every single bank manager everywhere, because there's a lot of idiot bank managers that have been sitting around with free money for 20 years that don't know how to make money in rising rate environments and have no clue how to manage risk. Look what happened to Silicon Valley Bank. That's going to happen 10, 20, 30 more times. I have no interest in bailing them out. They're idiot managers. It's not my fault. Let the market get rid of them, and it's as it will. The market's good at doing that. Well, I mean, obviously, you can ask about the board. You can ask about the San Francisco Fed in the context of the Silicon Valley Bank. The oversight was either negligible or not there. Obviously, this is a wake-up call to every bank board. And that also in itself is going to put a lot of scrutiny onto the balance sheets of these banks. And frankly, the only job you have as a bank manager is duration and risk. That's it. That's the only job you have. And if you can't do that, why are you a bank manager? Why aren't you fired a long time ago? At Silicon Valley Bank, they weren't even doing that. I have no idea what they were doing, but they weren't managing a bank. You can say the same thing right now about First Republic. Who wants to put their money there? Signature Bank's already gone. How many more are there? This conversation is not going to end anytime soon until the patina has been scraped through the system to find out who was not managing their bank and who shouldn't be managing their bank now. And I can tell you, taxpayers do not want to pay for that in perpetuity. Well, we've been shuffling money around from regional banks. We run a pretty big private equity portfolio, venture portfolio. When we give out money to a company, we never used to ask them, where do you put it? But since the events at Silicon Valley Bank, part of what we're doing now is completely taking inventory of where our cash that we invested in these companies is sitting. And if it's in a regional bank, we're pulling it and putting it into a money center bank. We've been doing that for weeks now. I see no reason, no upside at all, to put money, cash. I'm talking about cash. Why would you ever put cash in a regional bank? What could you possibly think would be a good idea there? Zero. It's crazy. So we've been taking it out of those banks. And by the way, I'm not the only person doing this. I don't have a kumbaya feeling about this. I simply want to protect my LPs, my investors from idiot bankers. And so the only way I can do that is to move it into the large money center banks. So I've opened accounts at Citibank. I've opened accounts at JP Morgan. We've moved a ton of money there because the chance of them going to zero is less than a regional bank. And by the way, this is why these regional banks are challenged. Maybe people aren't telling the truth, but try and find somebody that wants to put cash into a regional bank. Why would you do that?
So, is it a good time to invest in Bitcoin? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.